Welcome to Levingston RV Services. Today's video is going to be about buying an RV, motorhome, travel trailer when you don't have the best of credit. So my name is John. Give you another more background if you don't know who I am. I've been in the RV business for 11 years. My main background is in finance, but I also, work on them. I've washed them, I've cleaned them, I've sold them. I've done everything over the last 11 years you can think of with an RV. And driving home today, we had a few people that came into the dealership. I've been working for a small little dealership out in Beaumont, California for the last little over a year and a half, and a couple folks that didn't have exactly outstanding credit. So there's a couple of things, if you got a piece of paper and a pen to write down. Let's start with this. Number one, tier 1 credit in the RV business in California is an Experian FICO score that is over 800. Not what you see on your phone, but what is actually hard ran through a dealership's credit bureau system. Tier 2 is 750 to 799. Tier 3 is 720 to 749. Tier 4 is 700 to 719. And then anything below 700 is actually in this business considered subprime. Okay. Now, over the years, I've made a lot of connections with credit unions like Logix Federal Credit Union, which used to be the old Lockheed Federal Credit Union. And generally, if your credit score is between 660 and 720, we usually end up using them because they give you the better rates and terms compared to some of the normal banks we use, like Bank of the West, US Bank, or Huntington National. There's also Bank of America and M&T. So there's a lot of prime banks. So what's different between a car purchase and an RV purchase? Well, let's say you're a 640. Okay? You pay your bills on time. You've had a couple hiccups because of the pandemic. You've had maybe you've had a bankruptcy in the past, but you've reestablished some great credit with car loans and credit cards. You've been on time, but it just seems like your score just won't go up. There's a couple things you need to know. Number one, the term that you're going to get is between 7 and 12 years. And usually the amount you're going to be able to finance is going to be under $50,000. Now, there are exceptions to this rule, but for the most part, $50,000 is going to be the cutoff or the threshold for anyone in the subprime category. And your interest rates are going to be anywhere between 8.95 and 17.95. Now, the majority of you are going to be at the 17.95% interest. And they'll more than likely, most dealerships are going to put you at a 12-year term. Now, these banks, they're going to require 4 things from you. Okay? Number one is they're going to require you to show proof of income. Now, unlike a car vehicle, where you can use a job letter, bank statements, you can give your 1099 if you're a 1099 employee. You can show check stubs, a P&L statement, which is a profit and loss statement if you're self-employed. And you can buy a car pretty easily with that information and a 640 FICO. What they want to see in the RV business is they want to see you either have a paycheck stub, so you need 2 of those. Okay. The third thing is they're going to need to see a W-2 for your previous year's income. Okay, and the number 4 part on proof of income is if you are self-employed. If you are one of the many entrepreneurs that carries heavy credit card debt, you obviously your credit's not where you want it to be, but you've been working on it. The banks, unfortunately, don't care. They want to see tax returns. Okay? 2 years past tax returns. What does that mean? That means they want to see your adjusted gross income. Not the bottom line, but they want to see adjusted gross income. That's usually line 7 or 8 of most people's tax returns. And because they want full tax returns, they'll actually, in a lot of cases, add for depreciation as well. Okay? So with that being said, if you make $500,000 a year, but you show our federal government that you only make 25 grand, you will not qualify for an RV loan. Okay? Minimum income for a bank to look at you is $3,500 a month before taxes are taken out, before medical's taken out. $3,500 a month is the minimum income for these banks to look at you. My suggestion has always been, for years, when people call me over the phone and they tell me I've got bad credit, great. That's what I always tell people. Great. Bring me your proof of income. Bring me your paycheck stubs. Bring me your tax returns, and I'll figure out what we can put you in. I'll give you options, 3 or 4 options that'll help you out. It's better to bring this stuff with you when you're ready to purchase, because then it makes it easier for the dealership to find a couple of units that would work for you. That way you're not scrounging around and you run into something you're really in love with, but unfortunately you don't qualify. Okay? Well, they also have something called payment income. So let's say you show on your paycheck stub, that you make $5,000 a month. The maximum payment the bank will let you do is, if you make $5,000 a month, the bank will maximum let you have a $450 payment. Again, there are exceptions to that rule, but that is for the most part the golden rule, $450. This is why they spread the term out to 10 to 12 years, and so that way it fits within those parameters of where they need to be guideline-wise for the federal government to insure the loan. Okay? The next thing that you have to realize is you have to have the number 2 thing. We went over proof of income. The second thing they want to see is a utility bill. Okay? Folks, the banks do not finance people that are planning on living in a travel trailer, a fifth wheel, or a motorhome. There are only 2 that I know in the entire United States that do it. One is Alliant Federal Credit Union in Chicago, and what they require is immense paperwork and really outstanding credit and a lot of down. And number 2 is Costco, which actually has a program called Essex Credit, which is a subsidiary of Bank of the West. Again, prime credit, lots of down payment. So, the bank wants to make sure you have a home. It can be an apartment building. You could be living in an apartment. You could be living in a condo. Doesn't matter. They will want to see a utility bill, something in your name with that address. Okay? And the third thing they look for is comp credit. What does that mean? That means that if you're going for a $40,000 travel trailer loan, then what they will want to see is that you have at least paid a $25,000 to $30,000 car loan for at least 3 years. That means Not that you made 6 payments and paid it off in 6 months, but that you physically made at least 3 years of payments and established some form of credit on a car, a boat, a house, like a mortgage, not a rental, but a mortgage, and not credit cards. Not like a spa or furniture at a furniture store that's considered revolving credit. If you have a bankruptcy, they do not go off your past credit 5 years before your bankruptcy. They go, what have you borrowed since after the bankruptcy was discharged? Okay. So it's actually pretty simple. Now, most of these banks, excuse me while I'm getting over, I'm doing this while I'm driving because it just came to my head. While most banks in the car business will do 500 down, 1,000 down, these particular banks that will fund your loan want a minimum 10 to 15% cash or trade-in down payment in order for it to fit their guidelines. Why? Because unlike a car that's financed for 4 to 7 years, an RV is stretched out to a 10 to 12 year loan on a subprime loan. What that means for them is they want to make sure that you pay your tax, your license, any hitch equipment if you're doing a travel trailer, any accessories that are added on, and they want you to have a little bit of equity when you drive off the lot. They want to make sure, let's say in 3-4 years, you say, whoops, can't afford the payment anymore. They are not in a bad position. And what I mean by bad position, I mean that they're not buried in the travel trailer or the motorhome beyond the value of the trailer, beyond the value of the RV. What that means is they don't want you to finance tax and license. Okay? They cannot write that off. They cannot write that down. So they want to make sure that if they're in the hole or stuck in the hole, that they're stuck in the hole for basically only the value of the trailer itself. The last thing you must realize is that the banks do not allow, these subprime banks, I'm going to give you an example of one. It's called Marine One Acceptance. Their only interest rate is 17.75%. They're an outstanding bank. I have used them for years to help folks that want to have an RV, that have the income. I've had a lot of nurses and doctors. I've had a lot of people that came out of a bankruptcy, and these guys get them their reestablished credit, got them 10, 15, $20,000 RV loans for them to go camping. And, you know, generally when you do that kind of installment loan and you pay on it well, generally your credit goes up. The use of credit helps a lot. The use of certain types of credit help out. And I've seen people who we turn around and get them a prime loan on their second RV. So they're very, very helpful. There's a reason to their madness, but they don't allow the dealership to mark up the rate. You're going, what? That's right. There are no points on a loan with a bank like Marine One. Okay? There's 9 points with other subprime lenders, unlike the car business, where they can mark the rate up to 2% and make points on the back end. Subprime, in the RV business, there are no points. It's simply a straight loan. Now, sometimes they'll give a dealership a small percentage of the amount financed as a thank you for the loan. Okay? Some will pay 4%, some will pay 3%, some will pay 1%. Some will just pay a flat $250. So there's no real incentive for a dealership, especially a big box dealership, in this crazy pandemic environment to work on a subprime loan. The reason why is because there's no money to be made with interest rate, and more than likely an extended warranty or a service contract, gap, paint and fabric, all the stuff that the dealership makes on the back end of the loan isn't available in most of these loans, okay? So I still work with a lot of these guys. Now, heaven forbid myself, I have not had that many opportunities with people that have all that stuff together. So let's go over what you need. So let's go over again that subprime lending. An example would be a 550 score all the way to a 699 score. You are subprime in the RV business. Now, a lot of times we use credit unions for that 660 to 699, 719 score. Okay, because I also have credit unions. I'll take bankruptcies that are 3, 4, 5 years old that have reestablished credit. So let's go over those that are going to be under that threshold. One more time, you're going to need proof of income. Proof of income in the bank size is paycheck stubs, 2 of them, in combination with a W-2 from previous work years. You must have a minimum income before taxes of $3,500 a month. If you are self-employed, if you do not receive a paycheck or a W-2, you are self-employed. If you're cash under the table, if you're anyone that usually uses a job letter or bank statements to get car loans, you will not qualify for an RV unless you have tax returns. In those cases, you need 2 years of tax returns. And they do not look at your top line. They look at the adjusted gross income. That's all the available write-offs and what the government considers taxable income. So I've watched in my career, 11 years of doing this, guys who show up in a Rolls Royce. I had this happen. I was at a big box dealership in Colton, California, pulled up in a Rolls Royce, had Gucci everywhere. The wife was absolutely dressed to the nines, jewelry everywhere. He walks in, he can't even qualify for a $10,000 RV loan because he shows the government every year he makes $25,000 a year. And he's driving a Rolls Royce. So, with that being said, your adjusted gross income needs to be between $40,000 a year or higher for a bank to look at you. Number 2, you're going to need a utility bill, something showing that you live. Utility bill has to be electric, gas, a landline phone number. They don't take credit card statements. Sometimes they'll take a driver's license. If your driver's license matches the address, sometimes they'll take that. But for the most part, it's got to be utility bill, okay? Number 3, your payment to income ratio will be about 9% of your total gross paycheck, which means at $5,000 a month, they will probably let you borrow or have a payment of $460 to $480 a month, okay? And that's spread over 12 years. These loans will be around 17.95% interest. Usually it's highest, and then at its lowest be somewhere around 9%. Very rare at 8.95. It's way more common at 17.95 than it is at 8.95. Why am I going over this with you? So you're not shocked when you go down to a dealership and you go, huh? I've been there. I've watched a lot of people go, oh my God. And it depresses people. It stops them from wanting to go out and shop. Or they get all offended and mad, and then they go off and go shop at other dealerships. So this is what I'd like to do is I'm going to end this video right here. If you like this video, please hit the like and subscribe button for more content. I'm going to be going over negotiation and a few more things about financing probably later this week. Thank you so much. Have a great night.